So on January 1st, I decided to fund a Moomoo account with $100 to prove to you it's not about how much money you have in your account. It all comes down to the strategy. So in today's video, we are going to be doing an update on our small account challenge with $100. So I hope you guys all enjoy it. If you guys do, hit that like button, subscribe. When you guys do that, it means the world to me. So do it now. All right. Now, guys, if you guys want to learn more about swing trading and how I find these opportunities, my strategies, my approach, check out our school. It's fantastic. We offer private live streams, quizzes, lectures, a group chat. It's like a college class. There's the final exam. It's awesome. I wish I had that when I first started trading 7 years ago. So check it out down below. And you guys can use code BEGINNER to get 50% off. Only 8 spots left for that code, so make sure you guys sign up, click that link, and I'll see you guys in there. And guys, let's jump into this. So January 1st, I decided to fund a Moomoo account with $100 because so many people would comment and say, Carter, I only have 50, I only have $100, $200 to trade with. I can't make money with that. Yeah, you can. When you have a good strategy, the only thing that's separating you from making more money is just your account size. So the great thing about trading is the profits you make today can be used as leverage tomorrow. All right. Enough with that. How much money did we make or lose this past week? Well, we made $700 million. We made a whopping $16, which is awesome. That's a return of 14%. Now, I know I can't live off that $16. I'm well aware of that, everybody. I'm well aware of that. But the great thing about this is going to help jumpstart my trading. I can now take up more capital. I can continue the process. But more importantly, when it comes to trading, if you are, a trader and you make more than 3% in a single month, guess what, guys? You are in the top 5% of all traders in the entire world. So, yeah, I'm very happy with this. I'm very, very happy with this. So enough with that. Let's turn to the computer and see the trade. All right, so the stock that I traded here was Netflix. Netflix stock was definitely the more riskier play, but like I always say, higher risk often leads to higher reward. Going forward, I would be surprised if I do hold another stock through an earnings report because there's so much emotional tolerance involved with this. Now, looking at Netflix here, the main reason why we were getting in on it and why we called it out here is because of the heavy support here on the 90-day moving average line. You guys can see here, this blue line represents really good buying pressure in the past. So it hit it here. We had a good move, recently hit it again. So this is where we kind of got notified going, okay, if we enter here, we could keep our stop loss just below it. It'd be a really, really good risk and reward. Let's go ahead and draw it out so you guys can kind of see here. So enter on there, keep our stop loss relatively tight. About I would do about 2% from the current price about here. So, 5-to-1 risk and reward. So risking $1 to make $5, $100 to make $500. That was the thought process I had with this. Now, obviously, as we go ahead and we look at the hourly time frame here, the thing that I kind of want to talk about is breakouts. This is kind of what you want to look for. You can see in the past here where Netflix hit this 200-day moving average line on the hourly time frame. Hit it. What happened? It sold off. So now what we're looking for is a push above it. So you guys can go back, rewatch my trading routine video where we threw an alert right above here. So now the alert went off right in here, and this is where we got in. We got in above that 200-day moving average line where we had the first hourly candle close above it, right around here. Okay, right in this range here. So now I'm like, okay, the earnings report is tomorrow. I could enter here. We can keep our stop loss a lot tighter now, about 1.7%, because we can just keep it below that trend line. In preparation, if the earnings report's good, the risk and reward is still very, very good, coming in at 4.29. And this is why I want to talk about good risk management and why I love Moomoos, because they offer that really, really good tool. So since we're starting out with $100, if we could find a stock like this, once a week. So we take 52 trades over the course of a year, risking that 2% with a 4-to-1 risk and reward. If we can be right about 50% of the time, guys, we're going to grow our account by the end of the year to about $437. And this is exactly what we want to see. Now, the following year for 37, now we're at $1,900. So this is where trading can really, really compound your account with good risk management. So guys, if you guys want to sign up with Moomoo, I'll put a link to them down below because they offer this really cool tool. But more importantly, don't be discouraged if you just see those small wins. Small wins is profit. Profit is profit. I've never lost money taking profit. So, if you've only made $1 or $10, $20, whatever it may be, just understand the long game, understand the long-term game. And you'll be in a really, really good spot. Focus on good strategies. And yes, this stock was a very, very risky play because of that good earnings, which helped propel the stock forward. And obviously, the stock popped up. We're up 15%. Do you think I'm going to take profit when the market opens? Absolutely, I'm going to. I'm going to take profit because 15%, with a small account will really help grow it very, very, very fast. So now going into next week, the process and thought process I have is just continue to be profitable. Whether it's $1, whether it's $100, I don't care. I'm focusing on consistency. Consistency is the long game, and that's what we just got to seek out. So now it's just going back to the drawing board, looking for those opportunities. So guys, I hope you guys all enjoyed it. If you did, hit that like button, subscribe, and we'll see you guys in the next one. Take care.